Hello and welcome to InsuranceAsia News. I'm Kristina Shperlik, Senior Reporter, and I have with me today Tony Gallagher, Asia Pacific CEO at Guy Carpenter. Welcome, Tony.
Thank you.
Today we will talk about reinsurance market trends in Asia Pacific. Reinsurance market dynamics have shifted in 2024. What have been the key drivers and what are your major observations of the recent trends and renewals?
When I look at the market, I see reinsurers with high rates, good returns, and I see insurance companies with lower returns, but also still quite profitable. In the last 2 years, you had the reinsurers with higher returns in the teens, and you had the insurers really with the single-figure returns. If you go back the previous 5 years, this was the tables of turn. The insurance companies had higher returns and the reinsurers had lower returns. So you've got both industries making profits, the reinsurers with high profits at the moment. That's driving a desire really to continue to build their businesses, and you're seeing a softening of the market. And so across the 1st of January, the 1st of April, the 1st of July, it's been a similar trend where the rates are slowly but surely dropped down. In the insurance market too, you're seeing a similar sort of trend. I would expect this to continue through the rest of this year. The underlying factors which could change some of these would be around natural peril, large natural peril disasters could change the pattern. But barring that, you would see a similar sort of trend going through. There are fundamental changes in the market. I think you've got your climate change, which is forever present. What does that mean in terms of insured losses? What that meant, certainly in the 2024 and 2023 renewals, the retentions on the reinsurers, or the retentions on the insurance companies applied by the reinsurers increased. And so it increased across the board. So that when you have a loss today, we've had earthquakes and floods, a lot of these losses are retained. So if you go back a couple of years, you would have had a retention maybe 70% ceded to the reinsurer and 30% retained. Today it's probably the reverse, 70% retained and 30% ceded. So the losses being ceded through to the reinsurers are also lower than have been historically. That drives the higher return. The changing nature of risk is what we see with climate change. It means that some losses can be larger today than what they were a number of years ago. And so you have losses such as if you have hail coming down the valley, hail affecting a house with solar panels on is a far higher loss than a house without solar panels on. So you're seeing the changing nature of risk. Electric car loss versus a normal petrol car loss, very different loss transaction. So I think that these trends too coming through, majority of these losses are actually being retained and not ceded to reinsurers. So it's going to do a couple of things. One is at the moment you're seeing the reinsurers return still high. On the insurance side, you're going to see a lot of talk around risk management, risk mitigation, deductible levels on original policies, as the insurance companies really rebalance their portfolios. And that's what I think we'll see on the insurance side over the next 12 to 24 months, a rebalancing of risk and risk management.
Are you seeing a sustained recovery in available capacity and the retro markets? And what is your outlook for the renewals mid-year and into 2025?
For the retro market, we've seen new capacity come in. A lot of that capacity is coming with the existing reinsurers. So yes, I think that you'll see continual softening or certainly flattening out in the retrocession market. That will continue through this year, I think. Once again, subject to no major losses. I don't think there's going to be a huge number of startups. And this was a trend really 5 or 10 years ago where you had a market which was delivering high returns. It attracted a lot of new startups. The threshold now for a reinsurance startup is a lot higher than what it was a number of years ago. And also investors are a lot more cautious. So the investors are able to put capital in behind existing players with an existing track record that's a more attractive option. So I think we'll continue to see more capital going to existing players, which will continue to see the supply build up. When I talk about supply of capital and demand, we saw that in 2024 there's been a 4% increase in demand for reinsurance. So you're getting supplies outstripping demand, which means you're going to get continual more availability and more competition in the marketplace.
Has reinsurance pricing peaked, and what would that mean for the underwriting discipline, retentions, terms and conditions?
That's the million-dollar question, isn't it, around the reinsurance pricing, has it peaked? I turn to a few metrics, I guess, and I'll paint a picture which we can all decide whether it's peaked or not. In 2023, we saw the Guy Carpenter Rate Online Index, which is we track the relative changes from one year to another. 2023, it was a 20% increase. In 2024, it was a 1.6% increase. When we look at our retention index, which is the increased retentions across portfolios, there was a 20% change in 2023, and there was a 10% change in 2024. And then when we look at capacity index, which is our ability to get capacity to place programs, it was 110% in 2023 and 120% in 2024. So what that means is that you have 10% additional capacity one year and you have 20% on the other. So when you look at those three facts in the portfolio, you can see that the rates have clearly peaked and are coming down to an average 1.6% increase, probably more in line with inflation in the area. Retentions you can see relatively stabilised, and then also you can see that there's more capacity for the programs, and so you had pressure around signings, that there was a competition to get signings for certain programs. So it doesn't mean that the whole market is completely flat. It doesn't mean the whole market's reducing. I think when you have loss-affected programs versus non-loss-affected programs, I think that has an impact. And I think the lower layers, there's constant pricing pressure on lower layers. So I think peaked, yes, and then I think there's going to be around risk selection on a go-forward basis.
You've mentioned a couple of things here. What are the major reinsurance market trends you're seeing in Asia Pacific?
There's a few different ones I think about. I think about systemic risk is changing. So that's the uncorrelated events being correlated. So cyber's one of those. You could look at business interruption being another one. So I think we're going to see more systemic style losses. And then in terms of the industry, how does the industry deal with those style of losses? I think also in the market you've got technologies is a wonderful positive, so AI is a wonderful positive, but you've also got the cost of it. And so the expense burden in smaller companies from technology and compliance is going to be a bigger hurdle. And so I think you'll see pressure on expenses in a number of companies. And if you're not getting rate increase in the insurance companies, there's going to be this pressure around expenses. So how do you adapt and grow? Scale will become a differentiator. So scale will benefit. That will lead to a number of mergers and acquisitions. So I think 24, 25, we may see some consolidation within the industry, which I think will be good. It consolidates in some areas, and then I think in terms of new startups, you get MGAs really starting to play in the business in terms of specialty areas to build out, and I think you'll see more of that, which will also be very, very good for the industry. Overall, I think it's a positive-looking industry. It's healthy. The balance sheets are in a good position. There's the ability to invest in new products. There's the ability to grow into new markets. And so I think from an industry perspective, we're very well positioned to continue to grow. I think volatility will be continued to be managed with products such as structured products, which are starting to show their hand this year and also through next year, where you target the specific coverage that you want. So you can buy bespoke reinsurance. And I think that market's starting to develop as well. It always existed, but it's just starting to develop. So overall, a positive picture in my view, and it's positive across Asia Pacific.
Thank you, Tony, for sharing your insights. It was a pleasure having you with us today.
Thank you.